Today we're talking about how to get pre-approved and through processing and underwriting smoothly. The key to this is documentation. I know it seems boring, but it's the truth. The quickest thing to get approved and have an efficient closing is to have all your documentation ready and accessible. So the first thing we're going to talk about is your income documentation. If you are a salaried employee, a W-2 employee, hourly employee, you will need, depending on your loan program, you will need at least your last 2 years W-2 forms for all the jobs that you've worked in the last 2 years. Depending on the program, you may be required to have your last 3 years worth of W-2s, or if you had some type of job gap. So your W-2 forms from your employer, the direct forms from your employer. If you have a W-2 that has been amended, you will also need that amended W-2. The next thing is your last 2 years to 3 years tax returns. So if you're doing a USDA loan, if you're doing certain state housing programs, they will require 3 years of tax returns, whether you're self-employed or not. So whether you're a salaried employee, W-2 employee, or self-employed employee or person, they will require your last 3 years of tax returns. When we say your tax returns, some states require the state tax returns. You can put those in there, but what we really need are your 1040s, your federal tax returns that you have filed and proof that they've been filed. So you want to even make it even quicker, you can go online, set up an account with the IRS, and pull down your transcripts and send those to us. The next thing is if you're self-employed and you are doing a Schedule C, that's fine. We're going to use that income along with whatever personal income that you have. But if you're a corporation, you also need your business tax returns to go along with your personal tax returns. So that's a whole nother story. So it just depends on how your corporation is set up. The next thing is if whoever you work for, the company that you work for, you need the exact company name like you get paid on your check, not just what you call it or whatever, the exact name that comes on your W-2 and the location that you work at. If you don't work at that location, if you're a remote employee, you may be asked like, hey, why do you live in Atlanta but your job is in Ohio? So you would have to get some type of letter from your employer saying that you work remotely and that you can live wherever you want and still be an employee there and not lose your job, so you can purchase that home, especially if it's a primary residence. You also need a contact info. It's not a big company. We may have to order a written verification. So you'll need your payroll manager or manager that can verify your, especially your salary, your bonuses, commissions, and things like that. So someone that's going to be responsive and get back to operations as soon as possible. And your employment history for the last 2 years. If you've been working on the same job for 3 or 4 years, not a big deal. But if you're somebody who's had 3 or 4 jobs in the last 2 years, it's a bigger deal. So not that you can't get a loan or anything, but it's going to be more documentation. You may have to write a letter. Why did you jump around, especially if it's not in the same profession? If you had a job gap, that's another thing. You may have to be on this current job for a certain amount of time before you can get approved for your mortgage loan. Assets, we're talking about your bank statements, CDs, any type of retirement funds, IRAs, and things like that. We always need the last 2 months to cover the last 2 months for your assets to show the history. We will need all the pages. So if it has a blank pages in between, we need that last page that's blank. So don't worry about it. I sent it all the last pages blank. We need it. If it says pages 1 through 9, you send 1 through 8. That's not everything. It's best to give us your checking and your savings accounts. If there's money that we don't need, then that's great. We can omit it. But we want to get all the statements and the most assets up front. It helps you with your loan approval. The more assets you show, the more stable you are. And a lot of programs do require you to have reserves. Also, your debts. It's not just about your money you make and the cash that you have. You have certain debts. Your debts are your student loans. Are your student loans deferred? Are they in forbearance? It is a difference. Then it's going. Are you on a payment plan or income-based payment plan? There is a difference. So you do want to have that information. You should be able to go online and get that information. If you're thinking about getting a home, I would go online and get all my student loan information up front so that you can look at it. Depending on the type of loan that you do, even though you don't have payments on those student loans and they're deferred, a certain part of that 0.5% or 1% of the outstanding balance will be counted towards your debt to income ratio if you don't have a qualified plan. So if you have $300,000 worth of student loans out there, we're going to have to count a minimum, and you're just not repaying them, they're deferred. We're going to have to count a minimum of $1,500 a month against your debt to income ratio. So it's very important. Other things that affect your debts are payday loans, things like that. Or, if you have this, the underwriter sees that coming out of your account, your bank account, that will be added as a debt to you. The buy now, pay later accounts, those are things that you want to consider also. we do, if their payment is going to be, if the repayment on it is over 12 months, it can be counted. You would have to add that to your debt to income ratio. If it's less than 12 months, great. But guess what? You're going to have to document that. You're going to have to go online to that company. Sometimes it seems like they just have an app, and get the contract and show the payments that you have, and don't open any new ones while we're in the process. The other last thing is identification. We need you to prove you are you. This is one of the first things that we ask for, is either a government issued ID, usually a driver's license or a passport, front and back copies of it. We need to verify your social security number. We usually do that with your income docs and your tax returns and everything. Sometimes if there's fraud alerts on your reports, you may be required to show a copy of your social security number and to prove that it's you, so that we can be assured that it's you. If you're doing a refinance, this is very important. When you're doing a refinance, whether it's one home or two homes that you own or more, you're going to have to show a copy of your mortgage statement on those homes if you still have mortgages on them, a copy of the insurance policies, and if you have HOA or other things like that, you're going to have to show that you're up to date on them, and the most recent homeowners association bill. So that's something, especially for people who are investors and they may have 3 or 4. I got someone with 10 homes. You got to get all that stuff together. If your property, a lot of times too, you may have to show a recent property tax bill or a deed if you have a property that's free and clear, so that we can see that there's no other liens out there, like private liens or anything like that. The other thing that you want to consider on that is that even though those properties may be free and clear, those still go against your debt to income ratio. You still have taxes and insurance on those properties, so those would be calculated into your debt to income ratio. So not that you want to have everything at your fingertips, but the idea of this video was to help you be prepared, equals less stress and quicker approvals for you and for us. So if you have any questions or you have a specific scenario that you want to go over, reach out to me.